Hey folks, David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis. Today is Monday, June 15th, 2015. This is a daily chart of the E-mini contract, and you can see that we came down. I just put this line in there today as a result of this low here from the other day. So I wanted, and this was in a contract rollover. So this was a different low than the E-mini hit last week, but nevertheless, through the contract rollover, this is the new low. And I put the line in. We kind of almost kissed it today and then bounced off of it. And that could be construed in two ways. One is it could be construed as the market's weak and we're going lower because we came all the way down here today and didn't really recover fully above the next support level, or which is now resistance level. Or you can say this was a successful test of this level and then we're going to move higher from here. But here's the caveats. We have a pretty daunting week ahead of us. We have a Fed meeting that begins tomorrow and ends on Wednesday with a press conference from Janet Yellen and an announcement of their interest rate decision. We kind of know they're not going to raise interest rates right now. At least that's the conventional wisdom, the underlying belief. It's the belief I have. But you never know what they're going to say. And they don't really ever say anything other than that they're dependent on data and they blah, blah, blah. But what happens is the market participants take whatever they say and they interpret it, and then they make some kind of a determination on what they believe the next move is, and the market's going to whip around. And that's going to happen Wednesday afternoon. That's just about inevitable. And when we get closer to there, you'll understand. I'll talk about it more tomorrow night, but just in case, what happens around the Fed announcement on Wednesday is the market's going to whip around, and more often than not, about 90% of the time, the first move is generally the wrong move. Meaning the first move, whether it's up, 5 or 10 minutes later, the market will be down, or vice versa. If it's down, a few minutes later, the market whips up. And that's just the way it works. But it's a very difficult trade in terms of, guessing which way it's going to go. So you don't really play it on the announcement, but what you can do if you're an intraday trader is you can play support and resistance levels after the announcement. And so that's kind of the way that works. Then what else we have this week is, let me see, I have some notes here. We have, believe it or not, we have a new moon tomorrow that typically marks not all the time, but it can mark a turn in the market. So for example, let's just say the market's weak in the morning, okay? Come 10 o'clock, you might be looking for the market to put in some kind of a low. That's not out of the realm of possibility. It's not even that strange, even for those that have never heard any discussion about new moons, full moons, eclipses, that kind of thing. But you'll know that they do have a short-term impact on the market many times. It's more than 50% of the time, but it's not an 80, 90% of the time scenario. So it's not something you trade off of, but it's something that we're aware of that takes place. So if you see the market beginning to firm up tomorrow in and around that 10 o'clock time frame, you can say, well, maybe there is something to the new moon, therefore maybe the market is firming up and there could be a trade in there for the intraday traders. And those folks in the E-mini trading service that I have will understand that, and I'll probably be sending out a trade if one exists around that time. But they always have the support and resistance levels first thing in the morning. Okay. The other thing that's happening this week, later in the week, is options expiration week. But this is not your typical options expiration week. This is what we call quadruple witching options expiration week. And what that means is you have 4 asset classes expiring and rebalancing later in the week. So what happens is you're going to have traders jockeying for position later in the week because of that quadruple witching. And what happens is you have to be aware a lot of stocks will get stocks that are up very, very big into this week have a susceptibility to sell off, and stocks down big into this week have a susceptibility to sell off. And if I can find it, I'm going to show you an example. And this was Rackspace that was sometime last year. I'm going to go to the daily chart. And during options expiration last year, here, this had to be it. Let me go to April on the daily chart and see if, well, that wasn't the daily chart. And let's see if that was it. Rackspace actually ripped up enormously during options expiration. Here it is. Okay. So here was options expiration, and I believe if we look at the 15th of, what was that, May 15th? May 16th of 2014. I'm just going to quickly check out to see if I'm right. Yep, that was an options expiration. May 16th was the third Friday of the month, and you had a complete rip higher. And that's a function of options expiration week. Now, I'm not suggesting that Rackspace is going to rip higher to, this week. I'm just saying that it's typical for stocks to, that are down big during options expiration week to rip higher and vice versa. So it's just something you want to be aware of. So one thing in the portfolio that I'm looking for, and I'm not anticipating this, I'm just saying it's very possible, is Walmart. Walmart could rip higher this week on some kind of a nonsense rumor or a couple of upgrades that take place through some of the large institutions, Morgan Stanley, Goldman Sachs. They're prone to upgrade these stocks into options expiration. You see all this support down here at the 72.25 level. That's still holding. Just because we're down beneath that by 30 cents or so, that's not really meaningful. What's meaningful is really how we react this week and how we close this week, and I'm going to make a decision on what we do from there later in the week. But that's just something to be aware of. So let's go to the SPY, back to the spider, and you can see how we came into the 208 level here, pierced through it a little bit, and then reversed off of that. And if you go to the hourly chart, you can see it a little more clear, which is here. Okay, we pierced through 208. We basically made a double bottom on the spider, and then we reversed higher, but we weren't able to get over the next level of resistance, which at 209.37, and you can see here, that's where this level is. It just repelled it off. So you had a big up move off of the double bottom, and then now we're kind of consolidating. And what you'd like to see, for example, tomorrow, if you can see the first hour or two of trade this way, you'd be making somewhat of a bullish consolidation for possibly another move higher, maybe into this gap fill over here at basically 210. Okay, so we'll see how that works out tomorrow, but that's where we are. But you just have to be aware that the market is going to be very, very volatile this week with all the activity we have. We have the new moon, we have options expiration, quadruple witching, we have the Fed meeting. By the way, we have Greece, all the nonsense in Greece. By the way, Greece, and I know you've heard me say this at least dozens of times, Greece has been going on for 5 years, okay? So the market being down or up really isn't a function of Greece, but it is a short-term excuse for why the market may be whippy because they continue to beat on it in the media all day long, starting from last night. Greece doesn't have a deal. They're going to leave the euro. They have a deal. They don't have a deal. Who cares? It's not really relevant. We have a $50-60 trillion economy, and we're worried about Greece, which is the size of, one state that we have, and probably a smaller one if that. Who knows? It's not really relevant, and regardless of what Greece does or doesn't do, it's an excuse, not the reason the market is moving. You just need to be aware of that. But I don't need to fight that. If they want to believe Greece is the reason, the Greece could be the reason. It doesn't really make any difference. We know that we're looking for the chart pattern to tell us what the next move is. And until we see something develop where the pattern is telling us directionally one thing's going to happen or the other, then we're just going to wait until it does develop. And whatever they want to talk about Greece, that's fine. So hopefully that gives you an indication of what's going on. So basically we have bookends here of 208 and 209.37. Above 209.37, you're probably going to go to 210. This 209.88 will get taken out in lieu of this gap fill here right here at 210. In fact, I might as well even put it on, just so you have it, 210, and that'll be your gap fill. So, and then above that, you have 210.40, and then on up. These support and resistance levels should hold true. They're good levels, and we'll see how that pans out. So that's the story. Let's go over to the gold market and see what happened there. We had a nice little update in gold, and it started overnight. It started down here at 6 o'clock in the morning, and gold just ripped higher, and then we started consolidating for the remainder of the day since we made a high at noon. And there's nothing wrong with this market. This is another level of support at 1185. The water line, or the line in the sand, is 1174. That's this red line down here. Anything below hourly and then daily closes below 1174 is trouble. Okay, and you don't want to be there. And there's probably, well, not probably, there's very good support at 1180, and I'm going to put that line in, and I'm actually going to make that a thicker line, because 1180 is going to be good support, so I'm going to put that in here. So if you get below 1180, you're looking at 1174, but the chances are there's a higher probability that you would, if you went down towards 1180, there's a higher probability that 1180 would hold. And if that holds, in fact, you may not get there, because the chances are that your low here at 1180.50, okay, so this is 1180.50 is the low of this big candle here. The chances are that's going to hold. So you have really, really great support in and around the 1180 area. I think there's I'm pretty sure there's higher prices coming in gold. It may be whippy short term, but into July, potentially the end of July, maybe even the beginning of August, but into July, we should begin to see a move up towards 1225, even to 1240. And let's go to the longer term chart here, the daily chart. And let's see what we've got. So what I've got here is a target back up to at least this double top over here in the month of July, possibly into August. But I think that move has to begin at least short term, close by to now, but into July. So I'm okay with being long gold with a stop really below 1180, worst case 1174. And if you're playing the GLD, you can use your stops in the gold futures contract, these numbers I'm giving you, as your guide. So that should be a pretty good trade if it begins to work its way higher. That's what I see happening. I've got pretty good numerical and mathematical levels that are telling me that we're going to see higher prices, and we're going to take a run at this double top within the next few weeks, if not before. So that should be a good indication on gold. Oil. We're in the, this is the July contract, and I don't believe we've rolled yet. I'm going to double check that tonight, but for now it's okay. And what we did here is we came, once again, you'll see that we came into that level that provided phenomenal support at 58.70. It bounced off of it. We're making a bullish pattern, and I think there's higher prices coming in the price of crude oil. You can certainly see some backing and filling, but I think we're going to take another run at some higher prices in crude oil. And, here we go. We had a nice repel off 58.70. And I think we're going to take a run. We've got to recapture 61.75, and if we do, we'll take a run at the top end of this channel. And if it does not happen, if we break lower and we have to get below 58.23, if we get below 58.23 hourly and then daily, we're most likely going to the bottom end of that channel. So this should give you a pretty good idea of where you're right and where you're wrong in the crude oil market, okay? I think there's higher prices coming in crude oil. That's the stance I'm taking. Why? Well, I'm deriving part of that, and you know that sometimes I do look at other markets to give me an indication, even though I do believe that each market does trade independently of each other. However, I'm looking at the euro, which is indicated for higher prices. And on the daily chart, this is bullish behavior. This is consolidating sideways, ready for another move higher. And if you have higher prices in euro, the chances are you're going to have lower prices in the dollar. And if you have lower prices in the dollar, even though I do subscribe to the theory that each market trades independently, a lot of times you will get the rhetoric that with a lower dollar, you have higher crude oil, higher dollar, and sometimes the discussion and the rhetoric and the sentiment does propel the market higher in some of the commodity-related items, at least short-term. Therefore, I'm keeping my eye on it. I do believe we are going to see higher crude oil prices, higher euro prices, lower dollar prices, and you know I've been talking about the lower dollar, and I do believe that the dollar will remain under pressure. This is bearish, and first we're going to come down into the 94.50 again, and then we come down into this double bottom area, and if that doesn't hold, we're going down. We're going to first make a stop at 92.88, which will be right around this 200 period moving average, and then we'll see what develops from there. But this is not only, I'm not just saying it because I believe it, I'm saying it because this is what my technical analysis, my mathematical formulas, and the calculations are telling me is taking place right now. And until, in the dollar, at least we recapture these moving averages, there's going to be downward pressure in the dollar. So hopefully that gives you an idea. Let's go to the bond market. And in the bond market, oh, this is June. Let me go to the September contract. Let's go to the intraday. We'll go to the hourly. Let's go to the hourly. No, I don't want June. I flipped back over by accident. Okay, so this is the September contract, and we made somewhat of a low today, and we did bounce nicely off of that. And this is bullish behavior. As long as we stay above the 20-period moving average and continue to consolidate higher, the chances are this market does move higher. And if you go to the hourly chart, you can see here that you should find some support at these lows here. And however, let me give you the line in the sand on the bond market on where I think the bottom could be. In fact, where the bottom should be, no lower than here. Nope. Okay, so it should be no lower than 149.20. Where all this support is here. This pivot high, all this support here, these pivot lows, 149.20. The calculation came out to 149, and then when I take a look at what that represents, I see all of these pivots here. This chart support here, pivot low, this held, pivot low. I mean, you can pivot high. You can see all those support areas. And so my calculation is lining up with the actual chart support. So I know that this is good support. So don't be surprised if you see the bond market trade down to this area tomorrow. But I don't think that there's lower prices coming ahead of that. In fact, I think if the market firms up on that, I think there would be higher prices in the bond market. So that's what I'm watching. So I wouldn't necessarily take a trade long here. I would wait for anything close to this 149.20. And if you go to the longer term chart, you can see how we held. Let me even go longer than that. You can see, you know what? This was on the other chart. So just to bring it in perspective, on a weekly basis, I'm sorry, folks. I'm looking at, I want to be looking at TLT. And to give you the proxy at TLT, you see where we came in on a weekly basis. Last week, you came into the 115.43, had a great rally off that level. So let me just go to a shorter time frame here for a second, and you'll see that we are making a base. And as long as the market doesn't break down and coinciding with the level I gave you in the bond market, it's really just back to the 117.50, maybe as low as 117 area in the TLT. And what that would do is nothing bad to the market. What that would do is simply just give you a garden variety retracement of 50 or 0.618% of this up move, which is completely normal behavior, and there's nothing wrong with the market. If you should break down further, then something else may be developing. However, I don't think that's the case. I think this is a good low for now, so that's the way I'm treating it. So we talked about the dollar. We talked about, I kind of gave you the scenario with the dollar. We don't have to rehash that. We talked about the SPY. We talked about gold, oil, bonds. We talked a little bit about the euro. We talked about the dollar. We talked about crude oil. And I think that's about it. Are there any stocks that we need to cover? I'm looking here on my other screen, and I think we covered the important stuff last week. I'll cover a couple of more tomorrow, but for now, I'm going to leave it there tonight. Hopefully, this is helpful. I think that we need to be careful this week with all the activity going on. But once the noise clears, we'll get a good indication of where the market's headed. Technically speaking, or I should say cyclically speaking, we should still be in the zone for one more rally higher in this market. And if it's going to happen, it's probably going to start relatively quickly. And if it's not going to happen, I'm going to know it in short order. So I'm watching. That's where we are. Hopefully this is helpful, folks. I'm David Frost, My Strategic Forecast. Thanks for tuning in. Thanks for being members of MyStrategicForecast.com.